It's good to see you, Simeon. And man, banking crisis on the one hand and Lifetime doing amazingly on the other.
By the way, I was listening to the last segment, and I'm just thinking how much of like a comedic relief I'm going to serve here. That was intense.
I know.
So, listen, great to see you, Kelly. I think that we are seeing some nice traction in gyms, whether it's Lifetime on one end or Planet Fitness on the other. I think that there are certain things people are spending on, and I mean, this feels like the recession that we've all been waiting so long to finally hit. Of like, people have never been so excited for a recession. But we are seeing, despite all these headlines, we're seeing people spend. And I think what was interesting, membership and the amount and the price per membership were both up double digits.
Well, and it's kind of what Dave Zervos was saying, that, on the big picture, giving people 4% on their money all of a sudden is the kind of windfall we haven't had in a long time.
Yeah, maybe even ever for a lot of people. But the question is, are they seeing that, right? Or is this an outlet? And this is something that after being cooped up, I mean, it's been a long time. You and I had many a during and post-pandemic conversation. Mm-hmm. Perhaps the gym is some form of a necessity for people, right? Perhaps it's less discretionary and it's more staples. And obviously that's, depending on what the spectrum is and how much you're spending, that may sound a little bit absurd. But I think we are seeing people spend on things they want. We're seeing people spend on things they need. And perhaps this is some blend in between. Yeah,
Lifetime, I mean, I'm not even that familiar with the company, but for those who don't know, we're talking about average membership of $162 a month, over $200 in a lot of urban centers. Do you think these are going to be the first to crack in a macro slowdown? Or literally, I mean, listen, student loan payments, they went through and looked at this clientele. And if they start saying I have to pay a couple $100 a month once those payments restart, then I'm going to have to cut my pricey gym membership.
Right. So now it's a really interesting question because on the one hand, we're looking at the price level. On the other hand, we have to think about the demographic. Do we think that people are going to stop buying luxury handbags is probably a similar conversation, right? They're more expensive than aspirational, but is that demographic as targeted? So I think that is worth thinking about who the Lifetime demographic is. It's much smaller business, right? The numbers you just put up, contrast that to Planet Fitness, where you and I talk about 16, 17 million subscribers. So I do think there's an element there where they probably do have a healthy clientele. And I don't know how many of them are someone in college or someone post-college thinking that through. It could just be someone that wants access to their pool as well. So I would say right now in the spectrum of things, we do have only effectively two publicly traded gyms on both sides of the spectrum serving different roles. I think what we are seeing right now, Lifetime was a little late to that recovery party, and now they're enjoying it. I don't know how quickly they're going to lose it.
So real quickly, Simeon, why only a market perform on the stock?
Listen, I think that there's still stocks right now. We've been watching the concerns you're raising, and I think we have to figure out valuation. But this was encouraging. I think when you and I have been talking about Planet for a while, I think they caught the train earlier. I think people went back quicker to this $10 a month, effectively price tag there that most people could jump onto. I think Lifetime was a little bit later, and I think what we're seeing now is you're seeing some nice results where both of those are up double digits. But I think fair question.
All right, Simeon Siegel, thank you for your time today.